Hello, everyone. Hope you guys are staying healthy and safe. Thank you so much for joining this event. My name is Michelle. I'm the Partnership Manager at Venturra Discovery, and I will be the host for today. In collaboration with UMG Idealab, Plug and Play Indonesia, and Alpha Momentum Indonesia, will bring the fifth startup clinic discussing about portfolio management during COVID-19. Before we start, I would like to give each of the organizers time to introduce themselves and their company. The first one will be from UMG Idealab. Hi, Lutfi. The stage is
Hi,
yours.
Michelle. Oh, okay. Thank you very much for the kind introduction. Hi, everyone. Today, I'm going to tell you a little bit about UMG Idealab. Wait, let me share screen first. Yeah, I guess you can see it all right. Okay. So what is UMG Idealab? UMG Idealab is a corporate venture capital. It was founded in 2016. The corporate itself is based in Myanmar. So it's like 40 companies in there. So it's like conglomerate. And after that, we make investment arm. The investment arm itself is based in Myanmar, Indonesia, and also Thailand. Our mission is to see collaboration with the finest generation of entrepreneurs to achieve their vision in this digital era. So our main businesses are divided into three categories. The first one is venture capital, venture builder, and research center. So venture capital, I'm pretty sure you already know what it is. So it's like startup came to us, and after that, if you're interested, we're gonna invest in the startups. The venture builder is a little different than venture capital. Venture builder is usually the idea actually come from our founder, and after that, we look for the founder and the teams. And the third one is research center. It's like developing new product. We usually collaborating with universities. One of the example is actually called Artificial Intelligence Research Center. We're collaborating with University of Indonesia. So what we're looking for in startup is actually divided into 5 pillars. The first one is the integrity of the founder, potential market, the innovation, impact, and of course, the most important one is collaboration between the startup in our portfolio or our main businesses in Myanmar. Our portfolio so far, we already invested in like 60 companies around the world, but we invested mostly in Indonesia. We have like 30 companies 30 startups in here with the total disbursement of 28 million US dollars. We have one in China, Myanmar, we have like 11. Thailand also, we have like 11 also. Malaysia, we have 2, and the rest is in Indonesia. Our ticket size ranging from 50K until 1 mil. So we're investing in seed capital. This is the deal flow. I'm pretty sure you're also familiar with this, like pitching. If we're interested, we're gonna discuss the valuation, and after that, it's like legal agreement. So why do we invest in Indonesia the most? It's divided into four reasons. The first one is rapid investment growth. It's growth exponentially. The investment in Indonesia from 44 million US dollar in 2012 to 3 billion in 2017. The second one is leading digital population. We're number 1 for digital population in Asia and number 5 in global. The third one is emerging market and also tech savvy. This is few of our portfolio so far. So if you're like interested, not only collaborating with us, or if you want to collaborate with our portfolio also, you can contact me. There's like Prodi, it's like peer-to-peer lending in agricultural industry, and Aruna, e-fisheries commerce. I won't tell you one by one because it's like a lot, and I'm sure you don't have enough time. Okay, I'm just gonna go through it like kind of slowly, so you can maybe screenshot it or whatever. So if you have like a pitch deck or want to collaborate, please send your inquiry to lutfi@umgidealab.id. We're still looking at startup, and actually we're in the process of closing 2 deals as of right now. And as a token of appreciation for you guys to joining us in this event, we would like to give you an AWS credit. We are part of the AWS code. So if you want to try like AWS account, please use this code. You can take a picture or just like screenshot it from your phone. Or your organization ID is 0, lowercase u, lowercase c, uppercase p, and lowercase p. I think that's all from me, Michelle. So I'm gonna give the floor to you again.
Thank you so
Hi,
much,
Michelle.
Lutfi.
Okay.
Yes. The next one will be from Alpha Momentum. Hi, Rina. Ready when you are?
Hi, Michelle. Thank you. Okay, I will share the screen first. Okay, can you see the presentation?
Yes.
Yeah, okay. Hi everyone, my name is Yusrina. I'm from Alpha Momentum Indonesia. So I will just tell you briefly about what is Alpha Momentum. So Alpha Momentum is a corporate venture capital. We started in January 2018. We're actually Indonesia-based corporate venture capital, bridging and connecting and facilitating direct investment between our client and startups. So in Alpha Momentum, we have a corporate venture capital, but we also have a community of investors inside us. And the next one is these are our values. We really valued entrepreneurship in our startup, community, and innovation. The next one is maybe some of you are wondering how can we help startups. So besides funding, we also can help startups who register to our pitch day. The first one, we can help you through digital technology and IT infrastructure because our corporate is an IT company. So you don't have to worry about the digital technology and IT infrastructure because we will help you. And the next one, we will expand your business network. And the next one is access to investors and corporates in one platform. And the next one, these are kind of industry that we are interested in. The first one is payments, financial services, consumer commerce, artificial intelligence, education technology, digital healthcare, blockchain, and advertising technology. But we are actually really welcome to any kind of industry as long as your startup implemented technology for your solution. The next one, these are our main programs. The first one is pitch day. So we actually curate startups every month, and we actually held a pitch day every month so we invite potential startups to our investors, and after that we also deliver your pitch deck to our investor network. So it doesn't stop there to our board of directors, but it also deliver to investor network. And these are our current portfolios since 2018. You can see we have so many varieties of industries. So any kind of industry, it's okay as long as you implement technology. And the next one, these are our events. These are our monthly event. The first one is Startup Grade. Startup Grade is a free workshop program. Yeah, actually, we held this offline event every month, but because of the pandemic, we postponed this event. Also, the same goes to Traitors Day. And the next one is Alpha Kickstart. We are actually planning to have our Alpha Kickstart workshop next month. It's a paid event for workshop, and you can learn from the expert. And the next one, Pitch Day, as like I mentioned you before. The next one, we are also open for collaboration, partnership, and consulting events within our startup community. So if you want to join our event or partnering with us, we are really open and you can contact us anytime. And for startup founders, if you are interested to pitch with us, you can submit your pitch deck here, bit.ly/Alpha Momentum Startup Network. You can screenshot this now. And the next one, these are our current partners. We also partner with Microsoft, Alibaba Cloud, AWS, and the rest of them. And most of them are campus accelerators. Okay, I think that's all for me. If you are interested and curious about Alpha Momentum, you can contact us via this number or just email your pitch deck to us. You can directly email it to our email, communication@alphamomentum.id. And you can check our next events at our Instagram, LinkedIn, Facebook, and also website at alphamomentum.id. Okay, I think that's all for me. Thank you, Michelle.
Thank you so much, Rina. The next one will be from Venturra Discovery. Venture Capital is an early-stage VC firm investing in the leading high-growth tech companies in Southeast Asia. At the moment, we manage two funds. The first one is Venturra Fund 1 that focuses on Series A and above, and our ticket size is between 2 to 5 million. The second one is Venturra Discovery. Our second fund focuses on seed investments with ticket sizes between 200 to 500,000. Our coverage is Southeast Asia, and we are sector agnostic. Up until this moment, we have a total of 29 portfolio companies in 7 different countries. Under Venturra Discovery, we have 8 portfolios, 4 in Indonesia, 2 in Singapore, and 2 in Vietnam. Here are our investments so far in Indonesia. We've invested in Ruang Guru, Social, Zilingo, Grab, Fabelio, Ekrut, Medigo, and etc. Our funds are managed by John Riyadi, our managing partner, who is also the CEO of Lipo Group. And then there's Rudy, who is the founding CEO of Google Indonesia when they first opened their office here in Indonesia back in 2011. And we have Adit, our partner, who has made incredible investments in such a young age and has a lot of experience in the startup ecosystem. You can drop your investment proposals to our website at venturra.com. And don't forget to follow our Instagram, Venturra Discovery, to follow our updates on events and news. Next up, we have Fortuna from Plug and Play Indonesia. Fortuna, please go ahead.
Thank you, Michelle. Hi, everyone. I'm Fortuna from Plug and Play. Plug and Play is an accelerator for startup. We are a global innovation platform. And we connect the world change maker in one ultimate ecosystem. We become the bridge for corporate and startup to innovative their innovation with amazing solution. And along with the ecosystem, Plug and Play also connects startup with government, university, and investor. Plug and Play consists of 3 main pillars of innovation. The first is accelerator program, corporate innovation, platform, and venture capital. Through our accelerator program, we empower startups to accelerate their business by giving them meaningful connection with our network of VC partner, government bodies, university, and institution, and showcase their innovation in the Expo Day. And second, for our innovation platform, we connect corporate to our corporate partner, therefore providing them the opportunity to do pilot project and proof of concept and help corporate innovative to solve their pain points. This is done through what we call as a deal flow session with a startup and corporate. Lastly, we also do invest or co-invest with our investor partner on many of startup portfolio as a venture capital. Plug and Play has an extensive network across the globe, including over 300 corporates. You can see as we have Panasonic, Coca-Cola, Mercedes-Benz, and etc. And here's our success story. We had a Dropbox, Lending Club, and PayPal, and many more. Plug and Play was first started in Silicon Valley as the HQ and currently have empowered more than 28 offices located in many countries around the world. In Indonesia, we are located in Jakarta. Our entity in Indonesia is unique compared to other Plug and Play brands in other countries because we are also supported by JustCo. JustCo is a Gen Consolindo that was established in 2012. JustCo is a local strategic business advisory and investment alliance that also bridge our path between Plug and Play Silicon Valley HQ with Indonesia. And finally, in 2016, JustCo Plug and Play worked together to invest in startup through our accelerator program and was established as a joint venture. Our presence in Indonesia started from our president visit to Silicon Valley in February 2016. He saw that Plug and Play vision create a big impact on the technology world. Therefore, he thought that Plug and Play can improve Indonesia's startup ecosystem and eventually the overall economic growth. These are some snapshots from Mr. Joko Widodo and Plug and Play CEO founders Said Amidi in the presidential palace in December 2016, where Saids come to Jakarta and celebrate the soft launching of JK Plug and Play Indonesia as a response for Mr. Jokowi personal invitation. In April 2017, we held our first Expo Day as we have a partner with Astra, BNI, BTN, and Sinarmas. In November 2019, we have also started our partnership with Buma, ITM, and BCA. And also not only corporate, we also engage a startup closely with the media and tech communities for a brand exposure and meaningful connection. We also provide logistical support for our startup portfolio as we work closely with a few co-working space. And as mentioned before, we have worked with 7 corporate partners that actively look for innovations such as Astra, BNI, BCA, ITM, Buma, BTN, and Sinarmas, and also with the government, universities, and expert mentor across different industry, and also with venture capital partners. So far, we already accelerate more than 85 startups and do more than 25 investment. Basically, we have 2 batches per year. This month, we just closely the application for batch 7, and we will open batch 8 in August. If you are a startup, please stay tuned to our social media. And here's some our startup portfolio in Indonesia, where you might find some names that you may recognize as Pot, Sayur Box, Ternak Kopi, and Credible, among many more. I want to briefly touch on the perks that startup will receive when they join our program. First, we engage with startup closely through our accelerator program. The chosen startup may get the opportunity to receive an investment from us or through our co-investment with the ticket size of around 50,000 USD for a seed funding. And then we provide logistical support such as a 3-month workspace and workshop, mentoring, and etc. And also we connect you with the government, corporate, and also the VC. And at the end of our accelerator program, we hold a big graduation event with what we call is Expo Day. On this day, startup will pitch and showcase their innovation in front of the audience consisting of various corporate investor, VC, and the media. But in light this COVID-19 situation, we do online Expo Day. You guys can take a look at our YouTube channel. And last but not least, on 21st July, we have a workshop for the validating your market size and win the customer. Please register yourself soon. Don't miss it. Just go to the visit gkpnp.eventbrite.com. And last, you guys also can get a free 2 weeks workspace at JustCo co-working space. Just visit the link www.justcoglobal.com and fill this form, and they will send you the free pass code to redeem the 2 weeks workspace. And last, please visit our social media to get the update info from us, and don't hesitate to contact me if you have any question. Thank you, and I will pass to Michelle.
Thank you, Tuna. Now I would like to welcome our speakers for today. We have with us RJ, the Senior Investment Analyst at Monk Hill Ventures. Hi, RJ.
Hello.
Richie Wirjan, VP Investment at Gejolak SBI Orbit.
Hello.
Hi, Richie. Arya Setya Dharma, CEO at Prasetya Dwi Dharma. Hi, Arya.
Hello, hello.
And Yani Yusra, tech writer at Daily Social, our moderator for today. Hi, Mbak.
Hi, thank you for having me, guys.
We would also give a big shout out to our community partner, JustCo. Before we go into the session, I would like to inform the participants that later on, we will have a Q&A session. Please feel free to leave your questions in the chat box then. Without further ado, I give the stage to Mbak Yani and the speakers.
Okay. Thank you, Michelle. Thank you for having us to join the Zoom webinar today, and hopefully you guys can have a good insight about how to do when it comes to pandemic, this is the topic that we already talked about. I wrote so many articles about this, but we want to ask what is this VC takes on in terms of their portfolio, what is the management, how to avoid when it comes to manage their own portfolio. So before I begin with the questions, maybe you guys can introduce yourself and what is your thesis and probably a few or small updates about your PC. Probably starting from Arya.
Sure. Thank you, Yani. So, Prasetya, we're more like a corporate venture capital. The corporate itself, we are founded in 2008 as a construction in telecommunication industry. And starting 2013, we started investment in tech startups. And so far, we have invested more than 9 startups all over the world, about 40 something in Indonesia, some about 20 in Singapore and US, and several in Malaysia, India, and one in China. So yeah, we invested in early stage, usually seed stage, up until Series A and one Series B. But we mainly, our ticket size is about 50 to 100K. That's our average. But sometimes it can go up to 400, 500, depends on the deal. So yeah, that's a bit about Prasetya.
Okay, thank you, Arya. Next is Richie Wirjan. Maybe you can introduce yourself and what is Kejora SBI Orbit up to now.
Thank you, Annie. Hi all, nice to meet you. I'm Richie Wirjan, the VP Investment of Kejora SBI Orbit. So Kejora SBI Orbit is the recently announced fund, which is last month, we just recently announced about the fund. That is a co-GP structure. It's a joint venture between the Kejora Capital and also the SBI Holdings from Japan. So we both invested with the ticket size around 200K up to $3 million, seeing the seed stage up to the Series A round. The industry is agnostic, but we are open at the moment for any deals that you can bring into us. We will have to explore it and see how we can move forward together.
Thank you, Richie. Last but not least, RJ.
Thanks, Yanni. Hi, everyone. Yes. Good afternoon. My name is RJ. I come from Monks Hill investment team, taking care of Indonesia and the Philippines. Monks Hill is a VC based out of Singapore, but we do operate and look at deals all over Southeast Asia. We are typically investing in the Series A space, investing anywhere between $2 to $6 million US. Luckily, closed our fund before COVID, so we're still very actively investing. And so far, out of 2 funds, we have 25 investments all over the world, but basically concentrating most of it in Southeast Asia.
Okay, so let's dive in. So mostly you guys are investing before COVID, right? And probably some of you are invest also during COVID, like Richie said earlier. So what is the biggest challenges for you guys during this pandemic? How do you create the right startups, or how do you measure the right later stage fundraising in terms of startups during this pandemic? Maybe you can start from RJ.
Sure, thanks, Annie. I'd love to kick it off. I think it has been very interesting, the whole dynamic and everything that's happening in the ecosystem, in the market. I think it's a good way for VCs to kind of step out of the whole rush of VC and tech investing and basically look at what do we prioritize as some of the key markets and some key verticals that we want to see, that we want to focus on.
So you guys more into the perfect one, the better one, right?
Sorry, did you lose me?
Yeah, a bit. Continue,
okay.
RJ.
Sorry, thank you. My internet's pretty spotty.
It happens.
It happens, I guess.
Yeah.
So yes, back to the point, you know, we do want to prioritize different buckets of different verticals. We want to focus on, of course, the verticals that are still growing at this time. We typically don't want to invest in companies who are looking to just survive. We are always constantly looking at companies that are willing to grow. And of course, those companies that are strong enough to get out of this. A lot of good companies came out of the .com bubble crash, like Google, for example, who became, you know, a massive company that they are now. So this is also the same opportunity for companies to showcase their goals and their vision to becoming big companies one day.
Okay, Richie, maybe you can share what is your decision that you finally create this kind of strategy in fasting during pandemic. Maybe you can share with us. It's very brave of you.
So I think since the starting this year, right, we start to see some of the companies, startup companies, suddenly shut down. Some of them suddenly thrive, right? So from our perspective, it's kind of like bittersweet for the companies that these are actually the best time for them to really prove whether the business model is working or not. Because from our perspective, that we maybe some investment can be delayed, right? Either reason because of the money, either reason of the operations, but somehow we really take time to really decide whether we want to invest or not, because we want to make sure that whether the company pass these situations, right? And like what RJ said before, like a lot of companies came out during this kind of like a crisis. If you see like Spotify, Slack, Alibaba, even they just come out from the crisis. So we will see more players even reaching by the end of the year or even early 2021. We will see more prolific and solid companies after this pandemic.
Okay, Arya, do you think it's wise for VC to push on the initiative to funding right now, or is it the perfect time for you to invest?
Well, I think when this happens, right, I think the most important thing is that there are a lot of uncertainties of what's going to happen in the future, right? Whatever we say that the market is big and everything, we need to take a look at it again, because a lot of companies, even big companies, are failing, so we cannot just say that what we believed before, our thesis before, is still the same. So we need to dive deeper and dissect the data even better. Because, for example, in China did the lockdown, and then after they opened, it did not come back, it did not recover right away, right? I think the economic situation was like, it came back to like 60% after like 2 months of the COVID. And it's not gonna be like a V shape, right? It's gonna be like a Nike shape. So in terms of the market itself, the macroeconomics, we need to analyze first and then dig deeper in terms of the vertical. Definitely some verticals will suffer, will get the headwind, but some of the verticals will get the tailwind. Like a lot of the delivery startups, right? They're thriving and everything. Zoom is thriving. Amazon is thriving. Even Amazon is like trading right now at 3,000 USD. Sorry, 300 or whatever. And it's like it's way above the price pre-COVID, right? So I think in terms of each industry, you need to dissect deeper and do like a more deeper analysis. The way I see it, like, for early stage, I think we're investing in the future, right? So we need to think like, okay, let's say after COVID is done, 2 years down the road, is this startup gonna thrive? And is the startup attacking quite large market down the road, 2 years down the road?
So that brings me to my next question. Probably, Arya, you can continue. What is your strategy? Do you think it is the founder responsibility to survive during this pandemic, or as a VC, do you find this is the perfect time for you to give support in terms of money and moral?
So definitely, it's something that we try to do. When it happens, my team and I, we decide to kind of like see what's gonna happen with each one. And we try to talk to the founders. We try to reach out. If they want to discuss about it, then we'll discuss about it. We have like one-on-one chat and everything. We send like an email, say, like share things that's happening in your startup. We're willing to brainstorm with you. Some of them might had very hard decision to make. Firing a lot of people and everything. And it was tough for them, right? And we try to be there for them. in terms
Okay.
of moral. So we provide things like a consultation with a psychologist, so just to have that moral support. So I think that's
Yeah.
really important. But
Okay.
the founders need to understand as well, right? They need to be realistic, right? It happens, right? So do they still have that big market that they're attacking? And they need to realize, okay, if it's not going to work, then you need to pivot, right? So
Yeah.
for example, our fitness. So I talk a lot with Gita, right? Gita Sharir. And when it happens, people just cannot go to the
Gym.
fitness, right? To the gym. So what she did is like she pivoted the company to more online, and she found that perfect market. Right? So all this gym, they cannot be open, but they can train online. And apparently, people from Singapore who are looking for fitness as well, they want to do it at home. They're looking for cheaper options. So teachers from Indonesia, the coaches can coach the Singaporeans at a much cheaper rate than if you go to like a Singaporean coach. So I think being able to find that opportunity during this pandemic is also important. And
Okay.
if your business model doesn't work, just move on, right?
Yeah. Okay, Richie, maybe you can share your strategy in terms of doing the best way with your portfolio.
Yeah. So seeing that from our network, that Kejora Capital and SBI is not just about becoming as a VC, but we put ourselves as an ecosystem as well.
Right.
So by having several verticals in our companies, like in logistics, edutech, HR, and so on, that what we do is actually for the new investee or even what's on our pipeline, if we decided not to invest to them directly, we don't want to drop it right away, right? Because for us, we have spent our time to really digesting about them. So the best way that we can contribute is to connect them with our ecosystems. For example, like this investing company, we may not invest at the moment, but we connect them with, for example, Invest3 or even C88 in that case, to do some pilot projects to make sure they're sustaining, and we can see from them as well whether they're able to synergize with our company as well. Then from that we can continue our conversation whether to invest or not.
Okay.
But that's what we are trying to do at the moment.
Right. RJ, what is your take on that?
I think Arya and Richie had some fantastic suggestions and some plans implemented in their system already. Spot on, guys. But for us, I do want to highlight, using a tech stack to kind of make everything a little bit organized in terms of how you deal with portfolios and how you support them. So we do have, tech to organize all the data. Once you get over 20 portfolio companies, a Google Excel sheet or, those are out the door already. There's too many. So having a clear picture of your overall portfolio, having support ready when their indicators are going negative or positive, whichever way the KPIs are going, you're ready to strike and help any time. I also do want to highlight that we also use Slack within our portfolio companies so they can talk amongst each other. As Rishi said, synergies are great, not just for VCs, but also for companies as well. So this is what we want to do, create, strong bonds between them, because there really is no one else they can turn to during times of hardship. So this is very important for us. And from them working together, from them getting consultation from us, and also from other people within their ecosystem, they do a lot better. They have a clear plan of how to get out of COVID, or even just during COVID, and what to do to manage their people, their tech, their clients, and still generate revenue during this time.
Okay, just a reminder, if you guys want to ask questions with our three VC people today, you can just mention it on chat on Zoom, and I will ask the question right away to the three of them. Okay, that brings me to my next question, RJ. We've seen a lot of startups giving new added value, new services, even they change it into a more relatable and more relevant right now. We call it diversification. Do you think this is the right time for startups to try out the new business that they want to add into the platform without sacrificing the money? Because let's face it, we have to get to give more advertising, right? When you launch new services. What do you think about that?
Good question, Yanni. I think this is primarily a function of their current business model. If it's working, please continue it, please build on it, generate that revenue. Great. If it is not working, if you're in hospitality or travel right now, who's kind of suffering due to the pandemic, it's always a good idea to change or pivot your business model. Similar to Razer, the largest gaming equipment manufacturer and IPO company, but they started selling masks and now vending machines for masks as well. So it's a great example. These added benefits, added products really helps facilitate how they operate in the ecosystem, how quickly they can pivot and also create new businesses. And that just shows you how good of a company one can get. This is also very important to everyone's portfolios here who's attending today, and also startups as well. You have to be ready in case of something happening, like a pandemic, like a big drop of users or revenue, to switch to a business model that is fruitful and revenue generating. And that's just my key lesson for today.
Yeah. Richie, do you think stay relevant is really the best way to survive today?
I will agree with RJ. I think it goes back to the very core of the business,
Okay.
If you're not even unsure with the pivot stuff, then better not to do, because somehow at this moment maybe it's not the right time to test out, right? Because maybe what needs to be done by the startup company is that you've been running for 1 and 2 years, right? And you start to diversify your revenue model. Well, during this crisis, better be, if it's possible, focus on the first or 2 years revenue, because that's the part where you generate the money and the revenue, right? Rather than you start to exploring stuff. Because I think some of the companies here, even in local Indonesia, kind of like copying another companies. For example, like the grocery goes up, right? And then you see suddenly a property startup open up a grocery chain.
Exactly.
Is it relevant or not? Yeah, who are we to judge, right? But if you see it, back to the core of the business model, it's kind of weird. Like, why this company built this grocery? Oh yeah, okay, it's becoming like a bit opportunistic, right?
Right.
So be very careful about these situations. If you want to go really opportunistic, make sure like it's very clear. Otherwise, anyway, the crisis will move on, right? What you're gonna do after the crisis with this new business model, with this new diversification, will you continue or not? Otherwise, if it's just a quick win strategy, that will be good. But what's next? I think that's the part that the startup need to consider.
Okay, Arya, what is your take on that?
So I think we need to, when we want to do something like that big of a change, right? We need to use a framework, right? So I think as a framework, you need to see what's your competitive advantage, right, by doing that. And then if you already know your advantage, and then you need to see whether the logic, the internal logic and the external logic. Okay, let's say the external logic is saying that right now there are a lot of demands for, let's say, delivery for sayur, what do you call it? All the stuff, right?
Yeah, the farm to table business.
Internal logic is like more, okay, do you have the capability of doing that? Does your team really support for you doing that? Do you have the standard operating procedure that will allow you to move swiftly, right? So I think it's really important for the founder to take a back, to just look at it more in like a helicopter view and see it more, do I have all the pieces to do this? So for example, let's say Netflix, right? Netflix back then was more rentals, right? Before the what you know right now, Netflix now. So when they want to pivot, or not pivot, more added that service for the streaming, they see whether, okay, what is my competitive advantage? They have all these users, although those users are subscribing, right, through the internet, but deliver the DVD to the home. But they have all these users already. So it makes sense for them to launch this streaming because they already have the users. And then they already have the team to select all the quality contents. They already have the networks with the producers, with the distribution, for the videos. So they already have those capabilities to extend this service. So it's not a far-fetched for them to do this streaming. So I think you need to use that framework before you pivot. You cannot just pivot to something that you need to start from zero again.
Mm-hmm. Okay.
So I think it's important because you need to move swiftly. Yeah.
Okay, Arya, I'm still going to ask you about when it comes to cash flow. We talk about runway like all the time, right? I mean, startups sure have to prepare during this situation, but when they decided to postpone or probably shut down the business, what is the best option that you as a PC will be the perfect one for the startups, especially for the founder?
So actually it happened with one of my portfolio that, I'm not gonna mention which one, but it's that right now, it's just that right now it's just not the right timing. I mean, the startup still has money, but it's after we look at it, it's better to just more on zombie mode. And the founder decides to join another portfolio of mine for the time being, with us more, not a long-term commitment, but it's more like, okay, what do I bring to the table? What can I help you with? And then they decide to, because we already, Prasetya, we also have like a WhatsApp group with all the founders, right? So when the founder decided to do it, he announced it in the group, and one of them contact them and then contact him, and then start talking about it, right? So he joined that other startup, and hopefully, I don't know, maybe for long term or not, I don't know. But I guess it's more like giving options and also adding value to the other startups as well. Meanwhile, we still don't know what's going to happen with his own startup.
Okay, Richie, do you have the same experience like Arya had, or so far so good for Kejora?
Yeah, of course. But to be honest, like we would say there's a company that being impacted, right? At this moment, I believe most of the companies is being impacted, whether it's positively or negatively, right? But what you try to address here is on the negative side, right? What is there a company that is being shut down? In terms of the operation, there are a few companies that of course being directly impacted. The question is whether what would be the role or even the action that the VC try to support, right? Somehow if we have only a minority shareholders, like a minimum percentage, obviously sometimes the VC will let it go, right? But if we since most of the companies we have a quite meaningful minority, first that we do is even we have so-called like a bi-weekly meetings, and we do attend their meetings, discuss with them like what can be done, what can be managed effectively. Is there something that we can remove or reduce in terms of the spending? Because from ourselves, to be remembered that most of our backgrounds in Kejora is not just about as a IB investment related or even in a finance background, but most of us is entrepreneurs. So we know previously how to build a business, even during this crisis, like how to pass these situations. So I think being hands-on at the moment is what needed for the startups, and VC is becoming like a wake-up call, or even like a questions of their commitment, whether you really invest in the company and the founders, or it's just another dumb money.
Yeah. Okay, RJ, what is your take on that?
Oh, I definitely agree with Richie and Arya's point. I think being a VC, you have to separate the emotions from the logic most of the time. This is a crisis mode, and us being in industry for more than 5 years now, being agnostic as we are, we do have a few portfolio companies who have had issues, just in general, from the COVID pandemic. We actually did lose one as well early on this year, due to the fact that businesses just dried up. So how do we tackle the issues? In some way, for some companies, this COVID situation, this pandemic has actually been a little bit of a blessing. When you hear about startups, all you want to hear about is growth, users, whatever key metric, North Star metric you want to follow. But it actually gives you time now, since clients are not paying, for you to slow down, figure out problems internally, build stronger fundamentals, and then after this, you can execute as much as you want, you know? So right now, it's actually a good time to slow down, fix operations, fix internal. Sure, some employees had to get furloughed, pay cuts had to happen. Some people had to be let go. That's only natural in this kind of environment, in any industry, not just tech. But it's also important to kind of look into the company, each and every one of your companies, and see, how can we fix this? How can we improve this? Are there processes, operations that we can improve so that after this COVID, it can just go out the gate and jump and execute, build huge companies. But overall, there are some companies who have been put on ice, not just in our portfolio, but other portfolios. And I recommend them just to recalibrate. Talk to their team, talk to their advisors, their board, talk to their people in their industry, their ecosystem, figure out other business models that can work for them.
Okay. Still on you, RJ. Probably Mount Hill already have certain kind of startups that you are aiming for, but during this COVID and hopefully after the COVID, do you see changes in terms of category or what kind of startup that you are aiming for?
Of course. I just want to reiterate that we do put these sort of verticals in different buckets. Those who are high risk of the pandemic, those who are low risk, those who are more optimal for growth, those who are just trying to survive. And of course, at the moment, we prioritize those that are aiming for growth. Companies like Zoom, who jumped from 20, 30 million users to 70, 100 million users overnight.
Yes.
Those are the companies we want to look at. And luckily enough, we do have those companies that can scale fast, that can reach around the world very quickly. So luckily we have those at the moment, but of course, continuously, every day, talking to founders and businesses that can also capture this market during this time.
Okay, Richie, do you find it different during before COVID or during COVID in terms of your categories?
So nothing much change, right?
Okay.
But the way we evaluate the company is changed. That we try to review before the COVID case happening, right? Because surely there will be the new normal, right? But it's not going to go back to what happened in 2019, right? So when we review that, we try to evaluate whether the business model is very clear or not, right? And once during this pandemic, we assume that this pandemic will count it as kind of like a bonus, kind of stuff, right? Because soon it will goes away and it goes back to the very core of the business. So if the business model is very clear, having an initial or even strong boost during this time, the question is, once this pandemic goes off, does the company still have its own boost, or is just going down or along with the pandemic? So that's the thing that we review.
Okay, Arya.
So I agree with Richie that industry-wise, it's not that we're gonna cherry pick, but it's more like seeing how does the startup disrupt the industry. So it might be that like all this new retail, they're being hit as well. But do we find ways to change the business model, like what Richie said, right? Change the way they operate, be more lenient. It's not more like what they used to do before. So I think it's really important to see that what does the startup do in terms of how they're gonna disrupt the industry. So it's more like that.
Okay, during this time, the funding or the needs for startups to do fundraising is not going to stop, right? Maybe you can give the startup founders a few tips that what is the best way to fundraise during this pandemic.
Okay, so who's gonna start?
Oh, Arya maybe, or Richie? It's up to you guys.
Okay, I'll fine. I think being able to analyze the macroeconomics, but also unit economics, right? So I think being able to do both things in terms of is there going to be a market? Is there going to be a huge market if you can scale this up? But of course, you need to be able to analyze in the unit economic level that you're actually making money for each transaction that you create. It's not being subsidized. It's not being whatever. If your business model is from making money from that each transaction. But if you're like aiming for growth right now and you're not making money right now, are you attacking a large enough market that eventually you're going to be able to monetize? But then you need to be able to showcase also how are you going to monetize, and does it make sense what you're doing? So I think being able to analyze top down and bottom up is also important.
Okay, Richie?
Yeah, I add up a view from what Arya said. I think during this pandemic, I believe Monks Hill and then Prasetya indeed received a lot of pitch because a lot of startup need the money, right?
It's not stopping, right? Still continue.
It's not stopping. I believe it. Yeah, and all the cold emails. Yeah, true. So what I would say is that beside the fundamentals of the company is that I would say the projection matters, right? Because what the from several companies that we review is that the projection is not changed. It looks like nothing happened, you know.
Really?
So, yeah, still like when we receive it, okay, the growth is still like 10 times, or in a month or two, it grows another 50x, and I was like, really, how are you guys gonna do that? And and for them, even some of the startup founders still get blinded, like, no, we're that solid, like we're so strong that even this pandemic is just another crisis, you know. So I would say let's be real, okay, with the numbers, with the economics, with the projections, then it becoming more makes sense for the venture capital to review your company. Because otherwise, if the numbers is even don't make sense, remember, this is about business and investment. We're talking about numbers here. It's not just about the social psychography of the consumers, like, oh, the consumer behavior is changed, suddenly we can do this, you can do that. But let's be real, that the numbers is numbers. If the projection is not fit in, if the financial is not there, then revise it first, revisit again, discuss with the team, make a better pitch, then clarify with the VC. Then it makes it speed up the process, you know.
Right.
You don't argue much, like, why is with this number, why is this numbers, but it speed up, and in the end, any questions, or when we ask the VC, like, what would be the timeline that you expect for the fundraise, and most of the startup will say ASAP. Like, if you can give the term sheet within 1 week or even 3 days, that would be good, right? But if the numbers is not there, how can we decide?
Okay, RJ. So what Rich is trying to say is just trying to sense of the situation, right?
During what I said.
Maybe you have another. What is your take on that?
I agree with everything Richie and Arya just mentioned.
Right.
You know, and if you're a startup and if you want a quick tip, literally every plan that you had before March is gone, out the door.
Yeah.
You want to come to a meeting. You want to say, you want to proceed with caution, first of all, right? You want to come in and say, hey, you know, I know the market has hit us pretty bad, but here's our plan to recover, to recuperate, and move forward, and build strong fundamentals to go in the future. But if you say, hey, you know, last year in November, we budgeted for, you know, 5x, 10x, no, that's gone.
Yeah. Okay.
Please.
We've seen a lot of new business that before COVID is on stealth mode or just not increasing significantly, like groceries online and furniture online. During COVID, those kind of industry, those kind of services is rising up to in number of positive number. Do you think that that kind of business is becoming more after COVID, or this is only the momentum that they had?
That's actually a great point, Yanni. I just got off a board this morning who discussed this exact thing. You know, should we capture this temporary growth and really build apps, modules, systems for this? Or should we keep focusing on our core and do this, you know, with less resources? I really believe it's the latter. I think you're right. A lot of businesses who are pivoting right now are capturing great amounts of growth, revenues in verticals that they never thought about, only during COVID, which is great. You need to be a rainmaker during this time. However, the longevity of this, the future long-term plans, will actually hinder more for your company, because when things get back to normal, let's say 6 to 12 months, that's being hopeful as well. A lot of people will have copied the model. You have a lack of differentiation, and you don't have a stronghold within the market. And going back to your core, maybe your competitors are already better than you with their fundamentals. So actually,
Right.
think about this very, very carefully. You know, will it hurt me in the future, or will it benefit me in the future?
Okay, Richie, you have what, Sichapat, right? And what do you see next for Sichapat? Or do you see those kind of startups will only gain their momentum during COVID?
No, I think from the macro perspective that the pandemic really helped the market to understand that online really matters. The digitalization is there, right? So what's going to be the homework for the startups is that once this pandemic, let's say, is slowing down, the things get better. Well, what needs to be considered by the startup is how they still keep the engagement as if it's still still on pandemic, right? That's the consideration, right? Because you really feel the growth, right? But once and one of the rocket stuff is because of the pandemic. Now, sooner or later, the pandemic will gone, right? So how we can keep it boosting is to check whether, okay, what sort of engagement that really drive the consumer to go back to our platform again and again and again. Then that's the part that we digest, recalibrate it, and we extend it as, for example, as a new service, a new solution, or even a new products. So we can keep the growth there, even though the pandemic is gone.
Okay. Arya, what is your take on that?
So I think you need to see if, let's say, your market is right now is like this, and then because of this COVID is growing, your value capturing, right? You're because the value, there's a value creation market, you're capturing those market. But honestly, if you ask me, will it still be there after this? Are we gonna behave like what are we like right now? I don't know, right? But you need to be able to capture that value, right? So, for example, let's say those grocery, delivery. That user base is your value as well, right? How can you upsell things that they will need after this COVID pandemic ends, right? So I think in terms of strategy, it's like, okay, right now they need this. Okay, maybe right now they need rice, but later on maybe they need, baby products, for more like the recurring ones. So how do you create products that will have those long-term demand? Right now, you're just trying to capture all this value, you're trying to capture all these users, but how do you monetize this user in the long term? I think that's what they need to think of.
Okay, just a reminder, if you guys want to ask question, you can just mention it on chat on Zoom, and I will ask the question to our three panels. And I'm still going to ask you, Arya. PC keeps saying that cash is king, but on the other side, it is hard to gain more profit in terms of monetization and revenue and stuff like that. What is your advice to startups to maintain the momentum and also gaining profit at the same time during this time?
I think being able to create a story. So I think storytelling is really important for every founder to have, right? Because let's say you're building something, but you cannot market it well. You cannot tell your story. You cannot tell what you're going to build. No one's going to invest in you. So I think that trait of being able to storytell is really important. Being able to translate. It's like, okay, I'm talking in Indonesian, and then the Bahasa Indonesia, and then the VC is talking in English. If I cannot translate it well, there is gonna be a understanding of what I'm building. So I think being able to storytell what you're trying to achieve, where are you right now, what is your dream, and everything, that's important, right? But if you say like cash is king, yes, cash is king, right? Especially right now. and people are trying to conserve as much cash as we want because it's survival mode.
Yeah.
But if you look at the funds, let's say Kejora Orbit, right? You just close, right? So you're looking for investment. So definitely the vintage fund that has vintage 2020, 2019, they might still be looking for investment. But if you're looking for the fund vintage year 2018, 17, they might focus on their current portfolio. So you need to be able to dissect as well, which fund should I target? You know, so because as a VC, you also have an investment period, right? For a fund, you have an investment period. So you need to know as well, is the fund at the end of the investment period or in the beginning? So you need to be able to target your let's say your VC well as well. You don't want to like just talk to everyone and waste your time. Time is money as well, you know. So I think being able to know your potential VC who has that dry powder, that cash on the sideline that they're willing to invest, because it's just a secret. I mean, like a VC, you need to invest as well, right? So you need to deploy money as well. So definitely try to find the funds that are in the vintage year 2019, 2020, because they need to deploy.
Yeah. Richie?
Yeah. Oh, I love that. Yeah, I really love it what Arya said. Like see the vintage of the year. Like it's gonna be really helpful for the startups. And because to explain a bit that if you see that we are at the very start line of the investment period, means we have more time to review and as well as grow along with the companies, right? I think that's one of the importance for the founders to, before you sending cold emails to the VC, maybe review the VC first, whether the verticals is fit in, whether the vintage of the fund, whether it's solid enough and fit into to the stage of the companies. And to add up from what Arya said and to answer yours, Yeni, for me, besides all the story, which is for the early stage companies, surely we have to believe in the founders, right? Because at first we are betting on the founders, the passion, the dream, the visions, and during this pandemic, usually they can go even crazier, or suddenly they just shut down. Like, okay, this pandemic, it just ruined my life, so I just stop this business and I go back to work for someone else, right? But on the other side, that I would like to highlight is about the unit economics. Like, let's be real. Like, what's the numbers in there? Then if the transaction is very clear, where you get the revenue models, where's the supply, where the demand, what's the market size, what about the competitions, then it's better to review it than to discuss later. I think that's what matters for the companies now.
Okay, RJ?
I think Arya and Richie expounded on some pretty interesting touch points there. I think number one, as the first point of everybody is, you know, as a startup, whoever's watching this or listening to this, is do your homework. You know who is in front of you. You know, are they a agnostic fund? Are they a Series A seed investor? Those are all really important information when you're meeting. So you don't waste your time, you don't waste their time. I think that's very simple. The second thing, which I think is also very relevant now, is that I've noticed a lot of founders who aren't willing to sacrifice growth. And I think this is the most important factor right now. I think they will have to relax and grow margins, as Richie mentioned, you know, improve your unit economics. Don't always go for growth, even if it's stagnant growth and your margins are bigger. Better for your company to expand your runway, build better teams, and definitely better connections after this.
Which I'm going to ask you more question, RJ. We've seen a lot of new offers from startups, right? Like property turn into groceries and stuff like that. But it's only touch on the services. In terms of the innovation and technologies, like probably IoT, AI, stuff like that. Do you see Indonesian startups has a lot, or still in the middle or probably below when it comes to technology?
I think for innovation in that kind of space,
right,
both kind of a chicken and egg kind of problem. Do you want to IoT, you want to develop sensors, but most of your supply is from China. But so the logistics kind of hindered at the moment. But I feel, as an ecosystem, we always start with basic tech, right? Forums, from forums to e-commerce to logistics, and then later on you go to more the deep tech. So right now, I think we've done a great job with all our unicorns capturing this massive market in travel, e-commerce, and everything. But now I think it's time for a shift. Well, given the COVID, it's a little bit harder to try on these harder and more complicated technology verticals.
Okay, Richie, do you see Indonesia not enough have the technology or innovation in terms of what kind of startups it can emerge? Or do you see the potential but not enough?
I will go with the second one. We see the potential, but it's not enough. Right. If we see even from our side, from the Kejora, right, we saw a lot of companies overseas in Southeast Asia, and actually some of them, the technology is we can find it here. But the problem is sometimes the persistence of the founders, like they really don't know how to grow this, while the technology on the other country is growing, right? Some of the benchmark we found out that from this potential Indonesia, we can find out the benchmark outside of Indonesia. But the challenge is, even for the Indonesian itself as the startup companies, it's very hard for them even to convince the locals, to convince the market as well. So how they can really understand these innovations, or even, for example, the one when we talk about AI, right?
Yeah.
We've been talking about this big data, AI, IoT,
deep learning,
3 to 4 years ago, right?
Right.
And still, on the other side, the founder is very smart to sugarcoating the technology. Once we found out, it's not an AI, it's a predictive messaging, right?
Wow.
So you just record all the wordings and then you convert it. But it's not that there's no such like a brain behind the AI on that stuff. So then it goes back, like, how to say, Indonesian is very good in selling.
I guess, I know what you mean.
But once you get digging into it, like try to find out the truth, is that guys, you don't even make a technology there. It's not like what you said. So sometimes that what makes the VC kind of disappointed, because you love to I mean, for the startups, obviously you want to sell your ideas, you want to sell your companies, right? And for VC and the investor side to review all of this, whether what you said is real or not. But at least if you want to sugarcoat the things, make sure it's real.
Yeah.
Right. Otherwise, it even will hit you back even harder once we found out that, oh, actually, there's no such technology on it. Why should we invest? Right.
I mean, I know what you mean. I mean, as a tech writer, it's really excited for me to write when they come up with new technology. We're using this kind of, instead of just another on-demand, another, the stuff that already successful, but it's already there. So I just want to ask what your take on that. You want to add more, Richie?
Okay. So when it comes to the crisis now, most of the startup now, they're becoming very niche. Just to say because they want to say that they serve the right market, right? Then most of the companies, the pitch deck they show is about becoming like the so-called like on demand. Like I create this on demand, blah blah blah, on demand, right? The next question is, who demanded it? Like, who's the target market? Like, can you be specific about the target market, the demography, the users, the geographic? Because once we challenge on that part, it's actually it's what they projected. It's not what they're operating at the moment. Then it leads to go back to another to the back conversation we had. Like, is it projection based or is it operational based that show the real numbers?
Okay.
So you need to be very careful on their part. I believe the founders need to keep the sanity during the situations of this pandemic, even not just during, but the post-pandemic. But please be real about the numbers. And when you pitch, make sure that, like, you really show the exact numbers. We don't want to waste our time to just seeing the sugar coating, because later on, anyway, we're gonna strip off the sugar coat, right? We just want to see what's the real number. If we invest, what will be the best way to support you strategically, smart money, and what's gonna be the return, and how we can build this long-term relationship. I think that's what's needed for the startup at the moment.
Okay, Arya, I've wrote a lot of startups that offers new kind of technology to detect mask, to use AI to recognize if the people is using mask by using the technology itself. It's there, but not enough. Do you think this is the right time for tech startups to testing their products during this the right moment right now?
So yeah, so I think when you ask about IoT and AI, right? So I think I kind of have some background about it, because my main business is actually in building towers, telecommunication towers in Indonesia, right? So I know how the coverage is in Indonesia, and it's not like Jakarta. Jakarta is not Indonesia, So you can go to places where you don't have any signals and everything, and some areas only 2G, some areas are covered by 4G. So definitely coverage for Indonesia is not the same for everyone. So I think that's the most important thing. Infrastructure is not ready yet to have that enough scale to reach all those being IoT and stuff, right? You need to build towers that will cater those IoT stuff. So I think in terms of IoT, it's just not, the market is not as big as other countries yet. And so I think you need to focus on the big cities, solving cities, right, for those IoTs. So one of my investment, as you know, is Clue and also NoteFlux. They do both to do AI, right?
Yeah. Pretty obvious, NoteFlux, right?
Yeah. So I think why they can become such a great player, because I think there was a need from the government sector. Usually government will be the one that drive those needs for security and stuff, right? If you see in US back in, I think in the 70s, there were a lot of like government grants, for those innovating back in US in the 70s. And if you see Singapore now, they're being very, very, I think in the region, the top countries to promote all those deep tech. You have all those accelerator, you have like government grants from each ministry. Like if you're solving IoT for housing, you will get grant from the housing ministry. If you solve for energy, you will get grants from the energy ministry. So I think government support, government projects are like the test bed. So government needs to support all this AI, IoT, because to be honest, I mean, like for venture capital, like for us, for VC, sometimes it's too risky, right? It's too early. They're still developing the product. It's not ready yet. And then the regulation as well, regulation is slow here. So you need government support. You need those government grants to support all those, products, IoTs and everything AI that will thrive. And one of my investment is Igloo Home in Singapore. It's I'm sure RJ knows as well. It's padlock, locks and everything, smart locks. But some of the projects are with the governments, Singapore Power, and so they're really supporting these products. They're really supporting the startups to have that aspect. So I think it's really important for our government to have that initiative. I don't know if they already have some initiative, but I'm sure I don't hear it. But in Singapore, the government, they collaborate with the venture capital. Like for example, like co-investment. So like, let's say if there's maybe Moxil is part of it. Let's say if Moxil invests, they will match the investment. So those kind of thing is really needed in Indonesia, in my belief.
Okay, that brings me to my last questions. Probably you guys can add this. How do you see this pandemic? I mean, what is your tips for startups able to survive? Hopefully, until end of this year, we can, outcome this COVID. Do you have any tips? The best way for startups to just at least they can survive. Arya.
Oh, be lean.
Oh.
So I think if you ask me how's the economy gonna be next year, I don't know.
Uh-huh.
If someone can tell you what's the economic situation next year gonna be, they're lying. So I think right now it's just too uncertain. If you can predict the future, okay, then give me the money, let's bet.
Okay.
If you're wrong, I'm wrong. If you're right, I'll pay you. So I think we don't know much uncertainty. We need to know. We need to wait until let's say there's a like vaccine. Who's gonna be willing to take the first vaccine? So we need to wait until there's more certainty before we try for growth. Unless right now your startup's not offering. But if your startup is right now is like suffering, we don't know, a lot of uncertainties, just wait, be patient. I think RJ mentioned sacrifice right now. It's more survival.
Okay. Richie, quick, what is your tips?
I try to digest like the questions, right? Because I believe most of the founders here, you can find a lot of articles about how to survive during the pandemic, right? Including from the several talks. I believe it's a lot of recommendations, right? But for now, I think what I will recommend for the early stage companies, right? I think at this time, if possible, like I think the founder and the co-founder have to sacrifice. I think what's needed at the moment. Well, what several review that I made with the investee, potential investee, I mean, and when we review the data room and we read the financials, like during this pandemic, like before the pandemic or even during the pandemic, there's no such a deduction of the salary. For example, like the salary is still there. Like there's no such like, okay, we're gonna sacrifice another 50%. But what we found out is actually the salary of the employee that they cut off. So that's gonna be challenging because what we have seen that the founder wants to keep the safety net very, 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 very thick, and they will easily cut through for the safety of the employee. Then it means the founder don't really understand the meaning of bootstrapping and sacrificing as a leader. I think that's what we found out. And then and the second of all, I think let's really take time to see the unit economics. Like I will strongly suggest on that part, because for now, if you see the atmosphere of the investment, some investor will wait and see. Some investor can be more so bullish to really like, okay, I think these are the opportunity, let's invest. I think this is what we're gonna do, right? But remember, either we becoming more bullish or we becoming kind of like passive and wait and see. Both of us still wants to see the real numbers. The unit economics should be there, and you need to prove it to us. Don't come to us with a projection and you haven't done anything, because the door
it's not going to work.
It's not gonna work. You know the door where it's located, right? So you may walk out if it's not proven on that part. I think that's what I can share here.
RJ?
Thanks. I think the first point of Richie was actually correct. There's a lot of material around the internet from your friends that can give you some guidelines and tips, including our host here, Yenny, who has amazing articles on social. So if you're a startup or VC.
Yes.
The second point is, the biggest tip is you want to minimize burn as much as possible. You want to minimize as much as possible. We don't know what's going to happen. Everything is unpredictable, as Arya mentioned. Business models can change, market can change in an instant. from 2 weeks from now. So it's important to minimize your burn, keep it to your core team, and really just figure out, slow down your growth and just figure out what works and what doesn't work. And if that doesn't work, sure, maybe you have to close down. If you don't get money from, try to get money from P2P lenders, for example, or banks, or any other institution as well. So, work hard, be very careful, but also try to persevere, because strong companies will be built from this pandemic.
Right.
And years from now, 10 years from now, that, oh, this company, from Prasetya, from Orbit Fund, became massive. So that's what we want to look and see.
Okay, thank you for our panelists, RJ, Richie, and Arya. And I had such a great time and so many insightful info that I can write on for my daily social.id.
Please pay us, okay? Pay us.
Yes.
For this.
I
Can I
have
add
so
something though?
many insights that I can. Hey, yes, Arya, you want to add something? Sure.
Can I add something? Yeah, I think you need to keep your sanity as well. You need to keep your mental health as well. Because this is tough. And I think you need to be able to share your emotion to someone, to your loved ones, to your wife, to your husband, to everyone, to girlfriend, boyfriend, and don't keep it inside, because this is tough, yes, but everyone is facing it. So I think keeping your mental health is important, because we're gonna get through it. It's just a matter of time. And maybe like you're young, even you're in your 40s, you still have time, right, to recover. It's not the end of the world. As long as your mental health is good, wear masks, and when you meet people, love because love your loved ones. So I think that's the most important thing right now. Your business can fail, but then so what? I mean, you can start a new one, And I think embracing failures is also important, but knowing why you fail is also important.
Okay.
Nice one.
Thank you, Arya. That's so very wise. And mental health issue is one of the things that I'm focused on also in terms of startup founders and startup employees. So that brings me to the end of our discussion. I had such a great time. Thank you, RJ. Thank you, Richie. Thank you, Arya and Michelle. I give you the floor back to you. You want to say goodbye to us?
Yep.
Okay.
Thank you so much, Arya, Richie, RJ, and Yanni, for taking the time out of your busy schedules to share your knowledge and insights. Also, a big thank you for everyone that's watching. We hope you guys find it both helpful and fruitful. Stay healthy and stay safe. Don't forget you can redeem your JustCo's voucher for your free trial. And see you guys at our next event. Bye.
Question.
Bye, guys.
Do you want to have a Q&A?
I think there's one question.
Oh, yeah.
Do we have it?
You want to answer it? Guys?
Sure, I'll just do it really quickly.
Because the time is up. I
Sure,
thought you guys want to cut off.
I can answer. Hey, Herlin, thank you so much for the question. I guess the most important the track is cash position. How much cash do you have in the bank and in your runway? Those are the really, really main thing you want to focus on at the moment.
Yeah. And maybe if I may add up for the performance metrics, I would say on the average, the engagement of the users, like whether the previous month, before COVID and during the pandemic, whether it's changed, and whether as well as the cohort analysis, because we want to know whether the new users still stick within the platform. I think that's what we are looking at.
Arya, you want to add?
I agree. I mean, like, it's very important to know whether your customer for pre-COVID, are they still going to be your customer in the future? I think knowing that is really important.
Okay. Is that all, guys? Thank you so much.
Awesome.
And I'll see you hopefully offline after the pandemic, hopefully. Okay, Michelle?
Okay.
Thank you.
Okay, thank you.
Thank you,
Bye-bye.
everyone.
Bye, guys.
Bye.